Another year, another tax return, and for the 5th year in a row, I'm here to help maximize your return. I work with over 1,000 taxpayers every single year, so I do feel like I am one of the most qualified people here on YouTube to help you with the tips and tricks to help you maximize your return. Now, maximizing your return can be really easy. You go onto your MyGov account, you log into your ATO online services, and you just increase the number of the deductions, and you'll see that the refund increases. But this is the quickest way to skip go and go directly to jail, because if you don't have any proof, then you ain't going to be able to claim those deductions. What I'm going to do here is tell you the actual legal ways on how you can maximize your return. Let's start with the most obvious one, and that is claiming everything you're entitled to, finding all of your deductions. And it sounds really simple, but a lot of people get this part wrong. Now, I can go and tell you the best ways to do it. You can have a Dropbox account or a Google Drive account or the ATO app where you keep all your deductions throughout the year and it's all organized and you didn't miss anything. But that doesn't help you now if you're going to do your return and you haven't done that. So what can you do to help find those deductions? Well, you want to start thinking, what type of deductions am I entitled to claim? So look at last year's return, because that's a great starting point, because chances are if you spent it last year, you probably spent it again this year. So let's see what we've got and where we spent money last year, and now we want to search for it for this year. So there's two different ways that I think are great to find deductions if you can't remember it. First is to go to your bank statement, and ideally online, because then you'll be able to do some more searching and search for common places you know you spent work-related stuff. You might be a tradie and you go to Bunnings all the time. We can go into your internet banking hopefully and go to the last 12 months, make sure you're in the right dates, and search for Bunnings and see what comes up. This might trigger you to go, oh, I spent money on these dates. Maybe you go into your emails and you start searching for the words tax invoice or even deductible, because people will quite often use these terminologies in the emails they send you when they're sending digital receipts. So hopefully this will help you to find some of those deductions that you might have missed. Of course, you can scrummage through different paperwork. Maybe you've got it all in a drawer in the kitchen or it's in your car under the seat. But these methods aren't really ideal and aren't reliable. Ideally, you want to keep track of these things ongoing throughout the year so you're not doing this again in 12 months' time. The next area is motor vehicle expenses. And I talk about this one every single year, and there's a few changes, so it's really important that you listen again. There are two key methods here. We either have the cents per kilometre method or we have the logbook method. Now we'll start with the cents per kilometre method. This is the most commonly used that I see across clients. It's the easiest to use and quite often does rely on the higher claim in some situations. So what we want to do here is look at our total motor vehicle kilometres we've done for work-related purposes, and we times that by the cents per kilometre rate. Now the great thing, that rate has increased, so it's gone from 85 cents up to 88 cents this year. So this claim is capped at a maximum of 5,000 kilometres, but if you are claiming the full maximum, now remember you actually have to do the 5,000 kilometres, but that means your claim has gone from $4,250 up to $4,400, so an extra $150 claim this year. Now the 5,000 kilometres is per vehicle, so if you do have multiple vehicles that you use for work purposes, then make sure you're keeping track of the kilometres for both of those, and that is really important, especially if you've changed vehicles throughout the year. Now the record keeping for this method is really basic. You just need to come up with how you worked out those kilometres. Now this could be as simple as writing down how many trips you did from place to place and then looking it up on Google Maps to work out how many kilometres there were between those two spots, or it might be you literally keep a logbook still of all the kilometres you've done. Whatever method works for you, and it's just really important that you do it consistently. Now if we jump over to the logbook method, and this one does require a bit more record keeping, because as a starting point, we need to do a logbook. So we need to do a logbook for a 12-week period. This lasts us for 5 years. So what we do is we track how many kilometres we're doing for personal and work-related purposes, and this will give us our percentage. So if we go through a bit of an example here, you might have done that, and it comes out to 75% for work purposes. We're now going to claim 75% of our motor vehicle expenses. So this is going to be your fuel, your registrations, your servicing, maybe it's some tyres or repairs you got done, or the depreciation on the vehicle, or even the interest on the finance. So maybe you go through all those and it works out you spent $8,000 on motor vehicle expenses. So you take that $8,000, you do the 75%, and this will give you a $6,000 claim. So you can see in this case, if you were doing over the 5,000 kilometres, you would have been capped out at $4,400 under cents per kilometre, but under logbook, you've got $6,000. So it is really important to compare the two methods and go with which one works best for you. Now, if you are doing more than 5,000 kilometres a year, a great way to look at it is, well, how much would you have to spend for it to be better under the logbook method? So if we have that 5,000 kilometres, we know that our max claim under cents per kilometre is 4,400. Now, if we assume the vehicle is 50% for work purposes, you need to be spending more than $8,800 a year on the vehicle, or $169 a week on average. So this is a really good way to compare which method might work best for you. Now, if you have purchased a vehicle during the year then the depreciation claim can be significant, and this can dramatically alter which method works best. But just remember, there are other ramifications. They're a bit too complex for this video, especially then when you go and sell the vehicle. Now, I did mention at the start of this video that I work with over 1,000 taxpayers every single year through my business, Rooshock Accounting, but always looking to help more of you. So the links to our website is in the description of this video. We have fixed pricing for all our individual tax returns. In fact, at the moment, we found out we're in the bottom 2% of pricing, but we hope we're in the top 2% of service. So if you'd like to work with us, go down to the website and get in touch with us. But for now, let's get back into maximising your return. The next segment is something I talk about a lot. It's home office expenses. With more and more people working from home, but having a hybrid model where they have part from home and part from work, it's really important you understand how can you maximise this claim. Again, this is another area where we have multiple methods to pick from. Now, the most common is going to be the fixed rate or the actual cost, but I will touch on occupancy expenses at the end. So the fixed rate is very simple. We have how many hours we work from home, times it by a fixed rate, this gives us our claim. Now, what's really important is to understand what is inclusive in this fixed rate. So the fixed rate method includes home and mobile internet or data expenses, mobile and home phone usage expenses, electricity and gas for heating, cooling and lighting, and stationary and computer consumables such as printer, ink and paper. So you need to understand, if you're using the fixed rate method, you can't claim anything additional for these items because they're already included within the fixed rate. Now, you can still claim for things such as decline in value of in computer equipment or tables or chairs, whatever you're using at home. So it's really important to understand what's inclusive and what isn't. Now, this one has actually increased to 70 cents per hour, up from 67 cents in the prior year. And it's a pretty simple method. We might go, we work 20 hours per week. We work for 44 weeks a year. We did 880 hours from home. And this gives us a claim of $616, which is up on $589.60 last year if you did the same amount of hours. Now, you do need to keep track of the exact hours you work. So you actually can't just go, I do 20 hours a week. You need to show it with timesheets because the ATO want to know how many actual hours you work from home. And I think a lot of people would actually be surprised that quite often this actually might be more than they thought. So keep track of these, whether it's your timesheets or maybe it's a bit of a diary or just some kind of log to keep track of the number of hours you've worked from home. Now, the actual cost method is a bit more complex because we now want to get the actual cost of all of those items that were included in the fixed rate method. So the other things haven't changed, such as our depreciation on our laptops, etc. But we want to work out now our actual cost for our phone, internet, energy, and consumables. Now, consumables is really straightforward because we just go, well, how much do we spend on printer, ink, and paper, etc. But what about phone and internet? We're going to need to do some kind of log to show what percentage is for work purposes versus private portion. Once we know that percentage, say it's 50%, we then need to work out, well, how much do we actually spend on these items throughout the year? Maybe we spend $100 a month on each of them, so it's $1,200 for phone and $1,200 for internet, and we work out they're both 50%, so we claim half of that each, so $600 for phone, $600 for internet. Now, electricity and gas is a little bit more complex, so have a look here at what the ATO say. So they say you need to work out the cost per unit of power you use, which normally be on your bill, the average units you use per hour, which is the power consumption on the individual products you're using, and then the total hours used for work-related purposes. So this one is definitely more complex. A lot of people get to this stage and go, this is too hard, I'm going back to the fixed rate method. It will just depend on what your costs are and how many hours you're working. What I really highly suggest to people is do both methods. For the first year, you're working from home and compare the two. If there's a dramatic gap, then just continue to do that one method. But if it's close, you might want to do both methods every single year. Now, the occupancy method is more complex, so let's have a look here. They say you can only claim occupancy expenses if you have an area set aside that has the character of a place of business. Indicates that the area in your home you've set aside might be that is clearly identifiable as a place of business. It's not readily capable of being used for private purposes. It's almost exclusively used for carrying on a business, and the area is used regularly for visits of clients or customers. And you also need to make sure that your workplace does not give you a place to work from. This method is very complex and it's very rare that you're actually able to use it, but it can result in really large claims. So make sure you speak to your agent about it if you think that you're eligible. Now let's look at donations to charities. And this is one I think people forget because they quite often make donations through the year. They don't keep the record keeping and then they forget to claim them. So you're eligible to make donations that you make to DGR status charities. So these are deductible gift recipients. So the government have a really good tool here, part of ABN Lookup, where you can search for a charity to see if they have DGR status. So make sure you do that. Now, most charities, when they give you an invoice, they will state on there if they have DGR status. But obviously, you need to first locate the invoices. So I talked about that trick earlier on. You can do that with donations. Search in your emails for donation or deductible or invoice and see what you can find. Now, for it to be deductible, we need to meet these criteria. It must be made to a DGR. It must truly be a gift or donation. That means you're not getting anything in return. So you can't be buying a raffle ticket, for instance. It must be money or property. So this can actually include assets such as shares. You could donate them to a charity. It just depends. It's going to be a little bit more complex. And of course, it must comply with relevant gift conditions. So for some DGRs, the income tax law adds conditions affecting the type of deductible gifts that they receive. So you need to make sure that it is actually going to be deductible to you. You obviously then need to get your receipt, but if you tick all of those boxes, then yes, include that in your tax return. Now, if you have things like bucket donations, you can claim up to $10 of these without receipts. It's obviously not going to be a game changer, but it's still something. Now, if you've also made donations to political parties, you can claim up to $1,500 for political parties and up to $1,500 for independent candidates. So it's just something else to keep in mind. Let's look at tax agent fees. Now, these are likely going to be deductible for nearly every single taxpayer. Now, this is going to be a really easy one for you because if you're using the same agent as you used last year, chances are you don't even need to tell them because they've already done it. It's one of the first checklist items we have when we have a returning customer is we go in and add what fees they paid us in the prior year. Now, the second situation might be you've changed agents. So what we do, if we get a new client, we look last year on their return and see, did they use an agent? If they used an agent, we ask them, how much did it cost you to get your return done? And then we include that in the return. The tricky situation is if you used an agent last year, but now you're doing your own return, now the onus is on you to remember what you paid. And quite often I see people forget this. So just remember, if you used an agent the prior year and you paid them, then definitely make sure you're claiming that deduction. And this goes beyond just the agent fees. What other software fees did you use to prepare your return? Did you use something like ShareSite? So this is a tool that you can use to record your share sales and any kind of share dividends you get. I have a link in the description where you can get a good deal on that. What about if you've got crypto and you're using something like Crypto Tax Calculator? Again, I've got some links in my description where you can get some discounts, but this is a tool where you can calculate your crypto capital gains and income. Or maybe you've got a small business and you're using a software like Xero, which I'd highly recommend. Again, I do have a link in the description where you can get a great deal on it. But you can claim these fees in your tax return. And my final one is something I think a lot of people are even unaware of, but the ATO have some really great occupation-specific information on their website. So if you have a look here, you can go on there and you can search nurse ATO and you'll be able to find this website's link here and you'll be able to go through. They have a PDF here where you can go through common deductions and common things you can't claim if you're a nurse. You can then also go back here and you can go through all the different categories they have. It's a little bit of information overload and a lot might not apply to you, but I find that PDF in particular is really handy as a starting point. Of course, you can also chat to other people that are in the same occupation as you. And this can be a great starting point to understand what are other people claiming. But just be careful, don't take tax advice from a colleague. Use it as a guiding point to give you a starting point to do your own research in. Or you could even go to an accountant who specializes in a particular occupation. But just remember, in general, you want to make sure that you're applying these rules to your own personal situation. One of the things you do need to be aware about when completing your tax return this year is some of the key changes that have happened compared to the prior year. In this upcoming video, I go through some of the key changes that will affect 24-25 tax returns. I'd love you to go check that one out, or the 300 plus videos I have on my channel. The majority of them are all about you getting more out of your taxes. I thank you for watching this one, and I hope to see you over there.